Welcome to the Achievement Apex podcast, the podcast where I share my knowledge and experience on trading psychology, strategy, risk management, and everything else that you need to know to take your trading to the next level. I'm your host, Brendan Murphy, and without further ado, let's get ready to learn something new that you can use to improve your trading results. If you've been day trading for pretty much any length of time, I'm sure you've seen stats thrown around such as 70, 80, or even over 90% of traders failing in the long term. And you might be wondering, why is it so unforgiving? Why do so many traders fail? And the answer is not because they're stupid, because first of all, the people that know about day trading and want to pursue it, they already have a knowledge greater than the average person that says, I work for my money, that's it, leave that numbers investing stuff to those professionals. So the people that are day trading at least have already some baseline insight and knowledge into that. And furthermore, it's not like 90% of these people interested in trading are just throwing rocks at their screen hoping to make money. Like, these people are researching, they're learning new things, they're applying it to their trading, and they're still losing. Why is that? So in this episode, I'm going to explain how conventional wisdom and intuition are actually probably hurting your trading performance. And by reversing your thinking and by doing what might seem illogical, it will actually increase your returns, lower your drawdowns, and increase your consistency of results. As a human species, we've evolved for survival. A challenge that we might have faced thousands of years ago is like, okay, I'm holding a spear, what's behind that bush? If the bush rustles, that could be a little animal, or it could be like a fucking lion gonna eat us, right? You don't wanna take the chance of that lion eating you, so you run away, you get out of there. You don't wanna play with that lion. You don't even wanna find out what it is, right? And in the modern world, we just don't have those problems, right? We don't have these life or death situations that happen in an instant, right? We have very different challenges. We're looking at a computer screen where making one bad trade is not gonna cost us our life. However, we still retain those evolutions that we've had from our previous challenges. Although the single trade really doesn't mean anything in the grand scheme of things, we still get that big emotional response and what might be a hyper response. And you trade way too big position size, you get out too quick, you lower your take profit, all these things, right? And it's all because of these emotions built up because you don't want to fail. And ironically, all of these emotions trying to protect you from failing are the very things that make you fail themselves. So basically, if you want to thrive in the modern world as a trader, you can't rely on your instincts for survival, because these are survival instincts, not thriving instincts. You need to adopt a new approach, one that's designed for thriving, and then you can be profitable in the market. The first reason why conventional intuition will make you fail is because we are what's called risk averse. And so being risk averse basically means that we would rather take a bigger chance to avoid losing money than we would take to achieve a gain of the same amount. So to make that more clear, let me give you two examples. Would you rather have a 100% chance of losing $100, so it means give me $100 right now, 100% chance, or would you rather take a 50% chance of losing $300, which means, yeah, you could lose more, but there's a chance that you lose nothing? Most people are going to choose the 50% chance. They'd rather take a greater risk to avoid loss than they would to achieve a gain. And then on the other side, with the profit thing, would you rather have a 50% chance at making $300, which means you could make nothing, or would you rather a 100% chance at winning $100? You have a guaranteed $100. Most people are going to take that guaranteed $100. However, when you convert those tendencies into trades, so scenario one, which is what most people do, they prefer the 50% chance at a $300 loss, and they prefer the 100% chance at the $100 win. If we convert that to a trade, what that equals is a average win of $100, because you're always winning $100, 100% chance. But then the average loss is $150, because 50% of $300 is $150. And then when you repeat that trade over and over and over, every trade you're losing $50 and eventually you're left with $0. And that's why most people fail, because their instincts say avoid the loss, take the small win. And then eventually avoiding the small loss, you can't avoid every single loss, and that trying to avoid the small one ends up being a big one. So you have small winners, and then the big losses wipe you out. However, if you converted that not so common scenario of the 50% chance at $300 win with a 100% chance at $100 loss, Now your average loss becomes $100 and your average win becomes $150. Repeat that, repeat that, repeat that. $50 profit, $50 profit, $50 profit, and then you make money. But no one, or almost no one, is able to do that because it seems illogical to do that. It seems like, why would I take $100 loss for sure? It seems counterintuitive, right? But ironically, that's what you have to do to succeed in the market. And this problem, it expands beyond just making a strategy, right? So yeah, you can make the strategy that has the 150 average win and the 100 average loss, but then can you stick to it? Because when you have money in the market, you are going to start getting emotional and you might make bad trades. You're going to say, even though you've set your take profit up there at $150 or $300 or whatever, right? It starts going up, going up, going up. You see the $70 profit. Oh, it's close enough. I'm going to take it. I'd rather take the win, than risk losing it all. So then you take these $70 wins. So now your average wins dropped from 150 to 70. And then when it starts losing, you're like, oh no, it'll turn around. It'll turn around. I'll just wait for it to turn around. It's not at the stop loss yet. It'll turn around. So you're always hitting that stop loss. So now your average win becomes 70 and your average loss becomes 100. Now that's negative 30, negative 30, negative 30. Even with a winning strategy, because you were applying that same thing. Avoid the loss, take the small win. So even though your strategy was good, you still lose money because of those built-in instincts of survival. Avoid losses, take small wins. How do we fix this? Well, the main solution is, first of all, realize you're making a mistake, realize that your current approach is not working, and realize you need to change. And then secondly, you need to backtest your strategy. Create the strategy that has the big average win, the small average loss, backtest it for at least 1 year, take every trade that aligns with the strategy, get a list of it, and then have a look at the data. What's your win rate? What's your average win? What's your average loss? What's your expectancy? What's your biggest win? What's your biggest loss? Get all of this data so then you can see it and say, I know for sure this strategy is good, and that if I follow this strategy, then my results will be the same, or probably the same, as what this backtest suggests. Because past results do not guarantee future performance, so you can only say that it will probably continue. And so you backtest, and now you have faith in that strategy. Now you know that following it will produce gains over time. And you will have those $100 losses, $100 losses, $100 losses, but you know that on average, you're going to be making $50 per trade, so you repeat them and you win. So that's why backtesting is extremely important, because without it, you can never have faith in your strategy. You never know for sure that it's going to win. And that's taking the small profits and having the big losers starts to creep in because you have no kind of basis for decision making. Now, the second reason that conventional wisdom often leads to losses is because what most people do is they sell fear and they buy greed. So what happens most of the time is when a market's going super, super well, everyone wants it. Everyone wants to buy it. They don't want to miss out. And then when it's going terribly, no one wants it. Everyone wants to get rid of it. No one wants to hold on to it because it's losing. And a really good example of this is like the big Bitcoin bull run of 2021, right? So Bitcoin was like $20,000, right? Elon Musk made a few tweets and then a few other banks started buying in and all this stuff, right? Bitcoin rallies up to $60,000 or so from $20,000, all right? So then by the time it gets to 40,000, 50,000 and above, it's everywhere. Everyone's talking about Bitcoin. It's on every news article, it's on TV, and everyone's like, oh, Bitcoin, what's Bitcoin? How do I get Bitcoin? Bitcoin's just tripled in price. How do I get Bitcoin? I want my Bitcoin to triple in price. Now everyone's starting to buy Bitcoin, right? The price is like 50,000, 55,000. Everyone's getting greedy. They want a piece of it. And it's like, why didn't you buy in at $20,000 when no one wanted it? And then, everyone talks about it. Now Bitcoin's gone down to $40,000. Who's talking about Bitcoin now? Yeah, the people that were talking about it before, but it's not on TV. Your friends aren't talking about it anymore. It's not like on every single news article you see, it's like, oh, Bitcoin's down. Here's why. Why is Bitcoin lost? Why did Bitcoin lose 30% of its value? No one wants Bitcoin now because it's dropped in price. Where it's like at $55,000, you wanted to buy Bitcoin, and now it's at $40,000. You think it's too expensive? How does that work? In fact, when Bitcoin was $55,000 or $60,000, people are like, I wish I bought in at $20,000. Imagine how much money I made at $20,000. And that's because when it was $20,000, no one was talking about it. People were scared of it. They were scared that it had already hit its all-time high and now it had gone below. Bitcoin was dead. Everyone was scared. The people that bought in at $20,000 went against conventional wisdom. They knew that everyone was scared And that means it's cheap, so they bought up, and they bought a lot. And then when it goes up to $60,000, Bitcoin's everywhere. Now it's greedy. That means the price is too high and it's probably time to get out. Because when it drops, if you didn't get out, you start saying, man, I wish I sold at $60,000, which is ironically when everyone thinks it's time to buy because they don't want to miss out. So you can think of fear and greed as trading signals within themselves. So for example, with the Bitcoin thing, when it's everywhere and you know it's greedy time, think of that as a sell signal, not as a buy signal. Because most people see it as a buy signal, and as we know, most people fail in the market. And then when no one's talking about Bitcoin, when everyone's talking about how Bitcoin failure and no one likes Bitcoin, don't get it, it's shit, that's a buying signal. Everyone fails in the market, no one's buying Bitcoin now, so they're not winning. And then it goes up and well done, you bought the fear. That's what separates the winners from the losers. The winners go against conventional wisdom. They buy fear and they sell greed, which is the opposite of normal. They also have robust strategies that they've back tested that have the chance for big winners and they guarantee the small losers. So the average is profit. So I hope that this podcast helped you understand why conventional wisdom and intuition leads to failure in trading and how you can change your beliefs and your approach so that you can start profiting in the market, buying some of that fear and selling some of that greed. So thanks for watching the video. If you liked it, like the video, leave a comment, subscribe to the channel. If you have a friend that could benefit from the video, please share it with them. It helps out the channel. If you like, you can join the Facebook group. It's linked down below. Every week I have a in-depth training where I give you an indicator or a strategy that you can use for trading that you can actually implement yourself to make money. Or if you want to take it a step further, you can visit the website, theachievementapex.com, and from there you can book a strategy call with me and we'll design a custom strategy designed specifically for you that you can use to maximize your returns in any market that you want to trade on any time frame with any stop loss, any take profit, whatever your requirements are, we make it for you. So thanks for watching very much and I'll see you again in the next video. Bye bye.